Hi everyone, welcome to Property Ponderings. My name is Craig Nicol from Nicol Real Estate in Melbourne, Australia, where we provide people buying, selling and renovating advice. With over 15 years of property experience as an agency owner, property investor, town planner and buyer's agent, my goal is to help you make better property buying decisions and build the future you're chasing. So today we are diving into a topic that's been catching a lot of attention: why Melbourne's median dwelling prices are lower than those of other capital cities such as Brisbane, Adelaide and Perth. Is Melbourne really falling behind? Well, let's find out. And is there an opportunity to get into Melbourne while it is a fairly flat market and is a bit on the nose for the rest of the country? So let's start by breaking down what exactly median dwelling prices mean. This figure represents the middle point of both houses and unit prices combined, and not just houses alone. Here's the key factor: Melbourne has a far higher proportion of apartments and units than other major cities like Brisbane, Adelaide or Perth, and apartments, as we know, generally sell for a lot less than standalone houses. This has a big impact on the median dwelling value. Now, according to CoreLogic's September 2024 housing chart pack, Melbourne's median dwelling value is currently $776,000. This actually places Melbourne sixth amongst the 8 capital cities, behind not just Brisbane and Adelaide but also Perth. And to compare, Sydney unsurprisingly tops the list with a median dwelling value of $1.18 million. But hold on, does this mean Melbourne's house prices are in free fall? Well, not exactly. In fact, this shift has more to do with the composition of Melbourne's housing market than any other major drop in house values. So let's break that down further. A full 33% of Melbourne's housing stock is made up of multi-unit dwellings, such as apartments and the like. These types of properties cater to a different buyer profile, typically young professionals or investors, and they naturally come with lower price tags than family homes. So when we combine all these lower price units into the mix, it pulls the median dwelling value down. Now compare this to Brisbane, where only 25% of the homes are apartments, or Adelaide and Perth, where the figure is even lower at only about 16%. So the higher proportion of units in Melbourne makes the overall median dwelling value appear lower compared to those cities. And to give you some numbers, Brisbane's median dwelling value sits at $875,000. Adelaide is at about $790,000 and Perth is around $785,000. But these figures reflect a market that is much more skewed towards standalone houses than Melbourne. Now let's zoom in on the house prices specifically. When we look at just houses, Melbourne's prices are still amongst the highest in Australia, well above $900,000. This puts Melbourne far ahead of Brisbane, Adelaide and Perth when it comes to family homes. So for those looking to invest in Melbourne's apartment market, there's definitely an affordability advantage here. But for buyers interested in houses, Melbourne remains a very high value market, and prices for family homes are still much higher than those other capital cities. Another critical factor at play is housing supply. Melbourne has experienced a significant uptick in new dwelling approvals, particularly for units and apartments over the past decade. And over that decade, Melbourne's skyline has filled with new residential towers, particularly those in the CBD and inner suburbs. This increase in housing supply, especially in the unit sector, helps keep apartment prices more affordable, but also contributes to lower overall median dwelling value. So you've got to think about places in the inner city suburbs like South Bank and Docklands, where there's a huge amount of apartment dwellings that are popping up. In contrast, cities like Perth and Adelaide have seen much slower growth in apartment construction and higher density housing. As a result, their median dwelling values are more heavily influenced by the prices of standalone homes. So what does it all mean for property buyers? When you see headlines about Melbourne's median price falling behind Brisbane or Adelaide or any other city, it's important to understand that those figures might not tell the full story. So the key takeaway here is that Melbourne's median price is being pulled down by a large number of affordable apartments. But when it comes to house prices, especially homes, Melbourne is still a premium market. But all of this information, despite the median dwelling value changing, doesn't change the fact that prices in the other states are growing much faster than Melbourne has been growing. So they are certainly catching up quite quickly, but I'm just trying to give an idea of the full story here in regards to whether they've taken over in house price or not. Now let's talk about why Melbourne is actually a fantastic opportunity for buyers right now, despite what some might consider underperformance over the past 12 months and more in Melbourne compared to interstate rivals. We've seen Melbourne's property market experience slower growth compared to cities like Brisbane and Adelaide, which have had huge price surges. But as a savvy buyer or investor, this is exactly the kind of moment to take advantage of. In real estate, periods of slower growth often open up opportunities, and Melbourne is showing real signs of that. So let's break it down. First, Melbourne's recent performance has been shaped by several temporary factors. The pandemic hit Melbourne particularly hard. Longer lockdowns and border closures stifled demand. As international students, migrants and professionals weren't able to move freely, there was a temporary dip in demand for rental properties and housing overall. However, we're now seeing that start to turn around with borders reopened, the population growing again, and migration bouncing back. This resurgence is already leading to an increase in demand for both rental and residential properties. According to SQM research, Melbourne's population is projected to grow by around 1.7% annually over the next 5 years, which much of this growth driven by overseas migration. And where are all these people going to settle? They need places to live. So longer term investment wise, it's an opportunity for people that are looking for an investment because we know that the demand in regards to getting a tenant is there. Another reason Melbourne's a fantastic opportunity is its affordability relative to other capitals. Yes, Melbourne's median dwelling price may be lower than Brisbane's or Perth's right now, but that's actually an advantage for buyers. After all, these other cities have surged in price over the last couple of years, and as a result, the value gap between them and Melbourne has closed. But Melbourne is still a larger, more diverse economy and historically has long-term steady capital growth. It's important to remember that the Melbourne market moves in cycles, and while we've seen slower growth recently, history tells us that Melbourne tends to bounce back strongly. Property experts often emphasise that buying in established markets like Melbourne, where there's a proven track record of price growth and strong fundamentals, presents less long-term risk than buying in cities experiencing short-term booms. And this is something that I definitely agree in. The fundamentals in Melbourne are solid. We've got a diverse economy, world-class education institutions, and it's consistently ranked as one of the most livable cities in the world. These are things that draw people in and they create the foundations for future property growth. So let's talk about rental yields though. Melbourne's rental market is experiencing a tightening. We've all seen it in the news, and it's something that we haven't seen in years. After the pandemic, vacancy rates shot up, but that trend has reversed. As of mid-2024, vacancy rates are at record lows, hovering around 1%, which means rental properties are in high demand. This is pushing up rents significantly. CoreLogic reports that Melbourne's rental prices have risen about 10% over the past 12 months, and we expect this trend to continue as migration increases. So what does it mean for investors? Well, with rents rising and property prices more affordable compared to Sydney or Brisbane, Melbourne presents a compelling yield proposition. You can potentially enter the market at a lower price point and benefit from stronger rental returns, which is historically not a strength of Melbourne. It's a bit of a sweet spot for both capital growth and cash flow potentially. Another factor to consider is the government's investment in infrastructure. Melbourne has always been a city that benefits from significant public and private infrastructure projects, and this is set to continue over the coming years with projects like the Metro Tunnel and the Westgate Tunnel and Suburban Rail Loop as transformative projects for the city. These projects not only make Melbourne more livable, but they also boost property values in the areas surrounding these new infrastructure. Buyers who get in early in areas set to benefit from these projects could see significant upside as these transport links are completed and suburbs become more connected. And finally, consider the appeal of Melbourne's lifestyle. While property values fluctuate, Melbourne consistently ranks as one of the world's most livable cities, with its culture, food, sporting events, and overall quality of life continuing to attract both local and international interest. This lifestyle appeal isn't going away, and it's one of the key reasons Melbourne's property market has historically shown resilience and long-term capital growth. So even though Melbourne may have underperformed compared to other cities in the past year, 2 years, 3 years, it's important to recognise that this phase of slower growth presents a golden opportunity for buyers. You're potentially entering the market at a point where prices are stabilising, and there's every reason to believe Melbourne will see strong recovery in the coming years. Trying to predict when the perfect time to buy in Melbourne is a bit of a fool's game. And I think that there's some wonderful opportunities at the moment with properties selling a lot cheaper than they have in a while, especially some family homes that I'm seeing in really nice suburbs. So there's opportunities there for not just investors but homeowners as well that are looking to get in with some better value and hopefully some upside for those people that are looking to potentially sell in a few years' time, or just generally looking to try and get some equity on the buy. So there's wonderful opportunities out there. What's going to actually change the market? I think that major changes from the RBA with cutting of rates or any government-style stimulus can often be the cause of a rapid change in sentiment in a market, such as Melbourne, where it's sitting at the moment. So I'd be on the lookout for something like that to be wary that prices may suddenly turn and rise quite quickly, and that can happen in Melbourne. We've all seen it. So that's why I think right now at the moment it's a really good opportunity to buy if you can. Otherwise, just keep working to your own time schedule for those that aren't ready to go, but there is a good opportunity. So that's it for today's episode of Property Ponderings. I hope this has given you some insight into why Melbourne remains a great opportunity for buyers and investors alike. Of course, I'm biased. I am in Melbourne. I love Melbourne, but hopefully this still gives you some context on the opportunity that is there. If you'd like to discuss this further, or if you're looking for tailored advice on buying, renovating or selling, feel free to reach out to me at 0400 122 081 or drop me an email at craig@nickelrealestate.com.au. Thanks for tuning in, and I'll chat to you next time. The information provided in this podcast is for general information purposes only and does not constitute financial, legal or professional advice. While we aim to provide accurate and up-to-date information, every property transaction and investment is unique and should seek the advice of a qualified professional before making any financial decisions. The opinions expressed in this podcast are our own and are not a substitute for tailored advice from a financial advisor or a real estate professional. We encourage you to consult with a qualified expert who can address your specific needs and circumstances.